Hi, this is Randy Finney with Right Side of the Chart, and this is a mid-session update for Friday, October 29th, 2021. All right, so what we're going to do in this video is take a look at the equity markets. We'll start out with the short-term time frame and a very quick look at the long-term time frame. I won't go into a lot of detail, but it is the end of the month. It's the end of the week and the end of the month, so we're going to look at those two charts, those two time frames. That is the weekly and the monthly on QQQ and SPY. And then we'll quick update on Apple. It's one of the market leader. Well, it is the biggest component of the Nasdaq 100, S&P 500. Big dog at 2.3 trillion in market cap. So 2.5 maybe, yeah. I'm showing it 2.5. All right, so we'll look at that, then move on to quick updates on crude oil, natural gas, gold, silver, and the euro or US dollar. All right, starting out here, QQQ. What we have is a close to a sell signal, about as close as we've seen, but I'm going to just put a kind of a question mark by it. I'm going to call it a sell signal. We're really, again, we're right where we were a month ago, just before the last sell signal. So whether you want to call it a continuation of this sell signal, because we're now just basically coming back there and testing that level, double top high, or you want to call it a new sell signal, it's semantics, really. It doesn't matter. You're either already short from back here or long from wherever you are looking to get out, or you're looking for the next short trade or way to or time to exit your longs. Okay, so what I can tell you is this is a 60-minute chart right here. Let me fix that trend line. It should be touching right there. And what we have, plain and simple, is a breakdown on a gap down today and a back test. Now, take it with a grain of salt, because remember, we're coming off the last of the two big fangs to report. That was Apple and Amazon, and so the market's digesting those. So I don't read too much into what happens at the open and in after hours. Let's see how the market digests the earnings. Like as expected, Apple, blowout quarter, phenomenal earnings, blah blah blah. That's always the case with Apple, but they did mention supply chain disruptions and pricing pressures, inflationary costs, things like that. So as did Amazon as well, same thing. So that's where the market, there was a little volatility in the after-hour session. But all right, let's move it on. Let me just make it very simple. On this QQQQ time frame, we have a breakdown and a back test. So we'll call it for what it is. You can make a case for an objective short there, but I wouldn't do that yet. I'd hold off. That may be the case, but let me show you the 60-minute chart of the Nasdaq futures. Let's do that now, and then we'll get to SPY separately. All right, so QQQ we're looking at here, 60-minute time frame. When you go to the 60-minute chart at NQ, here's what it looks like. I'm going to tighten it up a little bit here, zoom in. All right, so you have the trend line off the recent lows right here, this trend line. Same one as we're looking at on QQQ, because this is the same time frame. There's your breakdown, and right now we are back testing maybe a hair above it. So what you want to see is a late day rejection, or this will probably be to be continued on Monday through the weekend, because Friday, if they park it anywhere near here, that's going to be basically be parking the index on a back test, and then you have some minor support there. So again, this is what you're going to need to see for the bearish case. Even if it's a marginal new high that takes back the trend line, you want to see these divergences kept in place, and you want to see a reversal and then a break of 15,536 right there, and that comparable level on QQQ, which was on the 60-minute chart about 378.44 right there. Okay, so those are the levels to watch, and again, kind of breakdown back test, but taking it with a grain of salt, and just not seeing a lot on the daily charts to really confirm this sell signal right now. So we'll call it a soft sell signal if you like. All right, Apple. There's Apple right here. It's kind of all over the place. Lately, it did put in recently on this 60-minute time frame right here a divergent high, coming off overbought readings as well right there, and it got knocked down pretty hard on earnings. And it's really, I had it in a megaphone pattern before, and that's still what it's in right now. It just got a little bit larger. So last time the stock put in a divergent high on the 60-minute time frame, it fell about over 12%. And this is still, could be viewed as a counter trend rally within a larger downtrend. Although, again, let's just see what happens with Apple, how it follows through tomorrow. It's hard to call this a sell signal because we didn't break any well-defined trend line. In fact, all we did on the gap down is hit support. I had this line here before at 147-ish right there, and we gapped down to that, and so far they stepped in and bought it. So, all right, guys, that's it. So nothing really definitive on the 60-minute time frame. We'll see. Maybe by the end of the day, a hard dump into the close, or early next week, a gap or move or drop down early in the week. We don't have to gap down. That could certainly help to firm up the case for getting short or aggressively short. I just can't make the case right now to get aggressively short. All right, end of the week. We're going to look at a couple other things. We're going to look at SPY, 60-minute chart right there. There it is. Negative divergence still very much in place, just like on QQQ, marginal new high. Daily chart right here. I have different boards. This board shows this marginal new high is still divergent high. That has been the MO for a long time now, where every time the market takes out the previous high, corrects, takes out the previous high, corrects, and you get these little pullbacks. This isn't like the old school breakouts or we have a stock that's pushing up against an all-time high and then breaks out and runs. This one has just been that kind of almost very predictable pattern of marginal new highs, and then every now and then you get a bigger correction. This is just a trend line here I have, and that one broke down back here, broke down, back testing again, and again the divergence is still very much intact. That's what it looks like on the daily time frame. But what I wanted to show you, and we'll do this on QQQ as well, it is the end of the week. So what has changed and what hasn't on the weekly chart? Well, number one, we still have the PPO. There's a few things I'm looking at here on the weekly chart, and that is the PPO gave us a bearish crossover, and that is still intact right now. We're still on down here. You can see below the zero line, the histogram's clearly red, and that is not going to change heading into the end of the week here. The histogram is too far below. It would take one heck of a ramp to get up there, and it's just not going to happen. So let's just look at that real quick. Well, we're going to go to the monthly chart, and we'll look at it there as well, the histogram. Let me put that back down a little bit and show you that that's that. There's the trend line right there. Breakdown, marginal new high, and divergence is still very much intact. And then, so that's not going to change. And that's, again, that's one of many things. It's more of a trend indicator. You can call it a sell signal. But when you go to the weekly chart here, you tend to get more whipsaws. See these crossovers that didn't matter? Although you have to respect it, because a lot of times the biggest, all the biggest drops in the market, 21%, 36, whatever that was there, they all came, the top came right around those bearish PPO crossovers. And now when you go to the monthly chart, it's you're just filtering out whipsaws. When you go to a longer term time frame, the signals are less frequent, but they're more reliable. And again, you can see the numbers here, or I'll read them out to you in case you can't see it on the video. This bearish crossover right here correlated with a 36% drop. This one here, 20% drop. This one here came, there was a divergent high, then came a 15% drop. This one here back in 07 was followed by a 56% drop. And this one here, back here, well, you had one, and there was a big drop there. That was the Asian contagion back in 98. Then you had the histogram went green, then it crossed over here. And this one took a little while. The sell signal came, and then it was followed by a 51% bear market. So again, all the big ones you can see there. Very, very few whipsaws. A very reliable indicator capturing all the bear markets and the biggest corrections that we've had in decades. Now, we're not there yet. You can see this is what I want to say. This is a monthly chart. We are closing the end of the month, so we have that PPO crossover on the weekly still in play, still bearish, but not yet on the monthly. Now we're going to wind it backwards the other way on QQQ and show you we're getting certainly close. All right, so there was one little blip, but it correlated with that 31% drop, 24% drop, 26% drop, 55% drop, and so forth and so on. These were a couple of whipsaws here that didn't really amount for much, as was this one. But again, do the numbers. Take it, you can just add in those, give check marks to the ones that panned out, and you'll see that it's pretty decent indicator. And that one was a, oh gosh, that was a better than a 50% drop. That was a 80 something percent drop in the Nasdaq back then in 2000. I just didn't have it measured out, but you can see. So it's pretty good, reliable, fairly reliable indicator. We're not there yet, but you can see historically, the way this works, and it's all about just looking at it slowly over a larger period of time. The momentum in the market, yeah, it's going up, but it's going up less, and that's where the momentum indicators turn, and they go down, and eventually they cross over. So rarely do you see, or I guess really, I don't think you've ever seen a point where the monthly PPO histogram, and ditto for the S&P 500, was this low. It's telling me right now it was, here, we'll do it this way, down to this level. I don't think it's ever dropped there and not made the crossover shortly afterwards. Didn't get that low there. Those bars are just above it. Cross that low there, then you got the crossover shortly afterwards. About hit that level there and eventually crossed over. So again, I must warn you, it is not a timing indicator, but it has some, not perfect, but some decent predictive value when you see it starting to roll over and heading towards the zero line. You can get a little last month cross, and it could take 2 or 3 months, or it could cross over next month. It's not going to happen this month right now. That's what I'm telling you, but it's very close, and coupled with everything else I just talked about, divergences, everything else, it's going to come soon. And what it's going to indicate is, most likely, is tell us that we're looking at good chance of a correction that measures well into the double digits, 30%, 25, 25, or 26, 55. And so forth and so on. All right, guys. So that's where we're going to close the week and the month. So with the oh yeah, I didn't show you the weekly on QQQ. Still very much solidly in the red. The PPO histogram right now. So we're going to get it. Looks like we had a crossover there. Had some volatility, a couple corrections in the market. Had a crossover there. Coincided with a correction. Had that. That was when COVID hit. Came early, got you out of the market. Or really, what it did again. It wasn't an exact timing indicator, but it did confirm this. This was our sell signal back here. So before COVID really was much of a thing, or at least to the markets, we got a sell signal that put you short or got you out of your longs, and that sell signal was confirmed with that crossover there, and then you were able to either capitalize on the rest of the drop by shorting the index or getting out of your longs and sidestepping that last 25 or so % drop. Same thing back here. Okay, let's not spend any more time on that. Let's move on to the next one. So really no hard or solid sell signals in the market. Kind of wait and see what happens next week there. Crude oil, close but no cigar. There's that primary uptrend line I've been talking about. Hourly chart, 60-minute candles, comes off the lows back around August 22nd, and just lots of reaction, including a couple more here. So also, like everything else, it's losing momentum, and that is measured by the these indicators giving us negative divergence. We had negative divergence there, correction, another divergent high, another correction, but the divergence continues to build, playing out for little correction so far while the divergences are still intact, because each time the crude oil makes a new high, it's been just extended the divergence. It's been building and building and building. And that's also evidenced by the fact in a strong uptrend, one and done. You come down, kiss the trend line. Well, you had 2 tests there and off to the races. One and done, one and done. Lately, we've been hugging that trend line. And we also remember, it's not just the trend line. You got a big support level at 81. So that's it on crude. We have bounced back to resistance. I have a minor resistance line here about 83.31, and that's where we're at right now. So this is what to look for next week. Break below pretty much 81 will do the trick. And that should take you down to any and all of these targets that I have listed here on CL, crude oil futures. And remember, I said a few weeks back that, crude, you're really going to need to see, or just going to help crude a short on crude or a breakdown to get some good traction, you're going to need to see the markets roll over. Because when the stock market's going up, it's implying bullish future growth expectations in the economy, and therefore that implies increased demand or continued demand for crude oil, and it goes the other way. So again, you can overlay a chart of crude oil in the stock market. You will see that they have a very, very high positive correlation. There are periods of brief disconnects, but overall, again, that's what you're going to need to see. So, you know, the story is the same on both. We've been building big divergences for a while. We've had some small sell signals, and we've certainly had some trades on crude, like I showed you before. You know, we caught that last top up here. Yeah, we caught that trade right there. Oh gosh, where was it? There it is. Had to go back a little bit farther there. Same thing, you know, divergence, building, and we gamed this one. We gamed it long and short, and that ended with that divergent low. So divergent high. This is a 1 hour, 2 hour candles, and divergent low, bottom, and now a divergent high, TH. The only thing you need to throw in there is a sell signal via break of the trend line, just like you got back here. And just like here, you had a breakout and a back to, actually no, that wasn't the trend line. Trend line was right there, was your downtrend line. There was your breakout. Here, I just paused the video and cleaned up these lines. I hadn't updated them a while. There it is. There's your trend line right there, uptrend line, divergence line, 80, 75-ish. That's that same comparable to the support level I just showed you on the 60-minute. That needs to go. Targets on this time frame would be 78, 90, and then 75, 72. Big level. That would be a back test of the key level there. It was a breakout and a back test here. And so there's your potential swing targets, and that would be a drop of about 9%. Yeah, about 9% in crude oil. Next up, natural gas, 60-minute chart. This is the trend line we're going with now, as I said, because we had a couple back tests there, so I removed that old alternative trend line. Big resistance there, about 6,222, and 1, 2, 3 or 4 failures there, followed by a rejection. Now the minor trend line's been taken out as well, and we're right at maybe a hair below that 540 support level right there. So if we can break that and do so, especially if we can come down here next week impulsively, that has the potential to give us that head and shoulder stopping pattern I just mentioned to you recently, and then you can see it here on this 2-hour candlestick chart. There's our primary trend line, neckline for the pattern, left shoulder, head. Some head and shoulder patterns have a double head, just called double-headed pattern. Some have 2 left shoulders, some have 2 right shoulders, some have both. Either way, that's what you need to see, is a move down there, and then a break below the uptrend line will take us right to the neckline, just a hair below, and that neckline might even be slightly upward sloping like that and come in together. So yeah, for all intents and purposes, that's what you need to do, is break that. And that would be a big down in nat gas if that happens, at least by the measured target. Widest part of the pattern from the top of the head down to the neckline, you measure that, add it to where it breaks down, and that's just, I'm just eyeballing a rough target. But that also comes in here, I'll give you the price level, why not? That comes in with some there's price support right there, and some price support right about here, 435, 4008, so we'll call that $4. And I think that's probably going to be closest to the target there, measure target that is. Yep, it sure is. Okay, somewhere around there. And let me give you a neckline here. There you go. And then keep in mind as well, when you zoom out to the daily chart, or the weekly, this is a long-term chart of nat gas futures. Here's that primary trend line I've been looking at for a while here. Remember, we had a rejection at that previous high back from 2013 right here. Pulled back, The initial pullback to the trend line, as expected, produced a reaction, a bounce, but we're coming back down. So break of this trend line, by the way, will, or as I said before, should correlate with a break of that head and shoulders pattern. So either way, whether you want to call it a head and shoulders or not, you have a primary uptrend line, a very steep uptrend line, and you're coming off overbought conditions down here on the RSI. And as I've showed you before, you can just see what happened to natural gas each and every other time we were overbought and or with divergences. And so there's the outlook for natural gas, just waiting for the next sell signal with the break of the support levels I just showed you. E7, this is an unusual move in the euro today, and that's what I wanted to cover. I gave you my thoughts on gold and silver, said this could prove to be a false breakdown in gold and silver today, both of which broke down. But as I said, and again, as I said in that post, I cannot emphasize the importance of this enough. You know, it's a false breakdown. I suspect that may prove to fail, but unless it does, it is a breakdown. So take it on face value. This is an unusually large drop in the euro today. It has a lot to do with what the ECB has been saying lately, and the market's kind of disagreeing with what they're hearing. They said they're selling into the euro. I think this is an unwinding of a large position, but let me say this. We're still coming off a very bullish pattern here, that bullish falling wedge breakout. We're still up. We're still above those, or right about. We're actually, look, it's almost a perfect triple test of those lows. So I think the euro is a buy right here. You're not going to see, the odds are very small. Let me just say there's no guarantees. You're not going to see this go down that much more. This is extremely oversold near term. I'm going to show you support on the longer term charts as well right now, and we're right there at support. There's support right here on the short-term charts. We had two lows there, and here, let me show you something else. Let's draw a line like this and like this, and what that shows you, and like, yeah, well, that's here. I'll draw them with the blue lines. This. And this, we still have divergence. Even if they want to flush out, clear out the stops, hit all the stops that are placed below those lows, as long as we don't go too much further, just maybe a brief momentum field overshoot, would be a divergent low. This is a buy right here. I just went long the euro. I'd been trading miners and metals recently, and I use the currencies usually just to chart to get my bearings on where gold and silver might head. But now I think this is a buy, especially with a stop somewhat. Well, it's not going to melt down. It's possible, and that's what stops are for. So use a relatively wide stop. Now, how far? Well, okay, let's say we get a little punch through. My next target on the euro remains up here to 117.90. Let's not forget, this is the reaction I talked about yesterday. I said we rallied right up, and I said it's rare to see that keep going. That was oversold. Bigger pullback than I expected, no doubt, but it is nonetheless a reaction exactly where it was expected, right there at that 116.88 target. And so that's technical analysis, and we hit it too. We had divergence here, at least on the RSI, not on the PPO. And so that's that. All right, so I like the euro right now heading into the weekend, long here, stop somewhat below. And again, when I talk about where stops are, if you are targeting, that 117.90 level right there, you can use, you could have a stop way down there. I'd have to measure it out for percentage terms for you. It's about there'd be about a 2.2% rally in the euro. So you could easily use a, a 0.7, 0.7% stop down below, which would be pretty sizable, and still have a nice 3-to-1 or better risk reward ratio. All right, so that's it. Euro looking good into the weekend in my book. Oh, let me show you the other reasons. I wouldn't base it just off a 60-minute chart. Let's go here, EUR USD, Euro US dollar pair. I'll start out here with a 60-minute chart. There's that same wedge, same levels I showed you. There's our bullish falling wedge, positive divergence, breakout, boom, 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 walking up. My first resistance level was clear. That was more of resistance, not a target at 158.10. Broke out, back tested, rallied up. Just yesterday hit. This was laid out in one of the videos a couple weeks back as my next target, 116.836. We hit that yesterday, almost to the button, and there's the typical reaction. Now again, we overshot. I would have expected normally a pullback this level to contain it. We took it out. So again, you have to be careful. We blasted right through that level, and I think there are just a lot of stops being hit, a lot of traders caught off guard But let's look at the bigger picture. All right, so impulsive selling, I know it's going to scare you if you were long the euro right now. It should be, or if you came into the day long. I warned of a likely correction yesterday, so I don't see any reason, like I said, to be long. If anything, we should have been short the euro yesterday. But with that being said, here we are. There's our previous reaction low. Any equal or slightly lower low, as long as it's not too much, you'll still have that divergence in place, even bigger divergence. And then now let's look at the more significant daily time frame. There it is. There's our clean downtrend line. That's the same. This is that same pattern on the 60-minute chart we broke out and back tested. So we're still above that. And look, big divergence here on the daily time frame. Daily chart is more significant than the 60-minute chart. Even if the euro thrusts down lower, it's still going to have divergence anytime soon. And really big support down here if you want to see how far it may go. I have a support zone that runs from 149.22 to 114.458 on the euro. That's the daily chart. And so again, we're above the wedge, and a breakout's a breakout. Breakout, little correction. I think we work our way up here. So I remain longer term bullish on the euro, which means bearish on the dollar. Hence my longer term and even intermediate term bullish outlook for gold and silver and the mining stocks. All right, and then the weekly time frame, we have a even more significant. Remember, you go out to the longer term charts, they override or supersede what you're seeing on the short-term charts, at least in my opinion. So there is a back test. Let me zoom in a little for you. Here, let me park this histogram. We don't need it right now. Back test of the primary downtrend line, which was broken here. Back tested once is just a second back test. And then that's my longer-term outlook for the euro US dollar. And last but not least, that segues into analysis of the metals, just real quick. There's the uptrend line in gold. There's that pretty big 1809 target / resistance level. I warned of this divergent high recently, right there, a negative divergence on the 60-minute time frame. And so if gold is, if the intermediate and longer term outlook is as bullish as I think, and my analysis is correct on the euro, I think this is going to be a nice old bear trap. But again, it was a blatantly obvious breakdown to all. You can see it's impulsive. The trend line you can't miss. So it is a sell signal. So I have to caution on that. And it could, we could have certainly more downside. I just don't think it's going to be the beginning of the next leg down in this, kind of sideways to downish trend right there. Time may prove me wrong, and that's what stops are for. But you have nice support there, about 1766. You still have support below that. And should the euro bounce next week, gold should rally. And if gold regains this trend line, and boy, I'll tell you, if it pops much above that 1810-ish level right there, you're going to see that's what a bear trap is all about. They get a nice, clean, obvious, blatant sell signal, and they short. And then those shorts, as it starts going up, they realize they're wrong. If the whole point of them shorting it, the breakdown of the trend line, is undone, meaning you recover the trend line. And then if you pop that level, not only are those shorts, that's probably where all their stops are between here and here and here. You're also going to have longs pile in on top of that. And remember, when a short covers their position, they're buying. That's how you buy to cover. You're short the stock, you have to buy it to close out the position. So that's what makes a bear trap so powerful, is that you have the shorts covering at the same time the longs coming in. It is a hypothetical. It's what I think might happen. If you can trade it, it's profitable to trade. But again, I have to caution you, we'll break down right now. So we could certainly go down more. And maybe it is the next leg down in gold. I don't think so, but trade it as you want. Just giving you my thoughts and levels to watch. If you take out 1766, not great. Take out 1748, even less not great, if that makes any sense. And then if you take out 1721, ugly. All right, silver, and then we will wrap it up. SI, silver futures, that was, by the way, a 120-minute chart. So is this on silver. Okay, bigger picture, we took out the trend line, bullish. Actually, first we broke out the wedge right there, positive divergence at the lows right there, divergent low, breakout. Then we took out the primary, more significant trend line. We're still comfortably above it right now. So silver could come back all the way down here, and it would be, to me, a great buy right there. So I have to say I'm still long silver. I'm in a, because of all the divergences and where we hit those levels and everything I talked about, I lightened up recently, but I'm still holding a position with plenty to add. And if it got down there, I'd probably be just as happy as if it just shot up here next week, because at least I'd be able to get in, add back, and take it to a full position back there at $23, give or take, and a back test of the trend line. If it starts to move up and the bull trap scenario or bear trap scenario materializes, then I'll still add there. I'll just be adding at higher prices. But again, that should take me up to the next target there, 25,850, 2664-ish, the next two targets there. So again, bigger picture, as long as we remain ideally above $23, because that would, or just slightly below it, because that would provide for a back test of the trend line and that level. I still very much like silver, and I think pullbacks are opportunities to add on. Anything much below that, and it starts to get ugly, and that's where I'm more concerned about scaling out of a position instead of into a position. Hey, I didn't mention this one in the beginning of the video, but I still like the 5-year bond right now, and in fact, normally I'm trading the 30-year. Sometimes I like the 10-year, but right now I like the 5-year. Not to say that they all shouldn't rally, but just a nicer looking chart there. So I wanted to just mention we've come back and made a successful, so far, second test of that recent low that I pointed out. It was a divergent low then. Since we have equal lows and the indicators are making higher lows, that extends the positive, aka bullish divergence, and we still have that 122 level to take out. So this is it. I think it's objective. I'd buy it here. And if or you want to be safe, wait for a break above 122. I think it should really rip if we can break out 122. And you have my targets: 122, 144, 122, 262, and potentially all the way up here to 123. And that'd be a nice move in the 5-year. Again, the futures are leveraged. If you trade the ETFs, you have to really load up in them to make anything. Percentage-wise, it's not a big move, and that's why. One of the reasons all stock, even stock futures, are leveraged. But so let's just say those are the things I like. So right now, a little more work to be done on the equity markets to really give us sell signals, because what we have right now, we're right on the line. So we'd have to gap down or move down on Monday or early next week, and then we'll have some confirmed sell signals on the equity markets. Until then, crude right on the line, close but not there yet. Natural gas, we've already had quite a few shorter term sell signals, still waiting for the big one on the levels I showed you there, but still looking bearish. So that's what it is. Bullish Treasury bonds, bullish gold and silver, with a little bit of question marks now with the breakdowns, bearish on equities with a little question mark there, and bearish on crude and natural gas. All right, we'll wrap it up here. This has been Randy Finney with the right side of the chart. Have a great weekend.